Hi, this is John Coumarianos for Real Investment Advice and Clarity Financial. You may have heard that Facebook stock suffered a big drop today. It went from about $215 a share to about $176 a share. That's a 20% decline. That's a really big markdown. I was lucky enough in that I published an article on Facebook on our website on Monday when Facebook was much closer to its high price of close to $220 a share. What I did was I wanted to see what future cash flow estimates were baked into the price. First, let's go to the price. Here's the stock price of Facebook, and you can see it's a 6-month chart. In 6 months, it went from about $190 a share all the way up to just under $220, and then the big drop today down to about $176. So, back to my article. What I discovered was Facebook produced about $17.5 billion of free cash flow last year. And that's how you value a stock. You want to estimate the future cash flows of the business, discount them, and figure out what they're worth today, because you don't have that cash in your hands today, so it requires your application of a discount rate. What I discovered was if you start at the $17.5 billion Facebook earned last year or generated last year, you went out 10 years, and you grew that $17.5 billion by 6% annualized, you wound up at the end of 2027 with over $25 billion in free cash flow. This is what was baked into Facebook's price on Monday. This kind of growth rate in free cash flow. By the way, this free cash flow growth rate also equates to about a 15% revenue growth rate every year. Now, let's back up for a minute. Facebook actually produced a 42% revenue growth rate in its most recent earnings report that caused the price drop. But the company forecast that revenue growth would slow down. So, in fact, the market thinks it will slow down as well and took that guidance seriously, and that's why the price was marked down. So I feel a little bit vindicated as an analyst. By the way, the new price assumes a 4%, not this 6% growth rate in free cash flow, and a 10% revenue growth rate. So we'll have to see if Facebook can achieve those numbers over the next decade. Facebook might still not be a cheap stock despite the 20% decline at its current $176 price. But we'll have to wait and see what happens. This is John Coumarianos for Clarity Financial and Real Investment Advice. Thanks for watching.